क्या बात है जी, हैप्पी होली, ऑलरेडी पिंक शर्ट पहन कर आए हो।
Oh, good morning, Nikunj bhai. How are you?
Well, could have been better if markets were better.
These are all cycles, Nikunj. You have seen it all across. So I think we should not be too worried. And on the contrary, I think after a long time, we have started to turn a bit constructive on markets now. And I think three, 4 points which probably I would like to draw your attention to. I think over the last 18 months, the slowdown which we saw, and especially from March 24, was a combination of both monetary and fiscal tightening, which we have been seeing. And I think both at the margin have started to reverse. And at least in my career over last many, many years, except GFC and COVID, I have not seen a policy pivot as strong as what RBI has done in the last 45 days. And I think that's getting clearly ignored by the markets today. RBI has already announced a liquidity injection to the tune of 6 lakh crores, very well ignored by the markets. Policy relaxations in terms of risk weightages, ignored by the markets. And the third important point is the policy rate cut action after 5 years, ignored by the markets. So I think the RBI policy pivot is a very important and substantial move from a macroeconomic perspective. And over the next few quarters, we will start seeing the impact at the ground level. The second is the government capex. We were minus 12%, if you remember, till November. December, January has been very strong months, and so is Feb looking to be. And I think from that perspective, when we speak to the core industries at the ground level, whether it be cement, whether it be the long product steel, wires and cables, batteries, all are talking about a better fourth quarter and better economic environment and demand environment. The third important part is the fiscal consolidation. Nikunj, don't forget, we are the only country in the world from a peak of 9% on fiscal, we have come down to 4.8, and next year is expected to be 4.4. And from there on, I think the fiscal consolidation will only be 20 to 25 basis points compared to the last 5 years, we have seen the maximum fiscal consolidation. So I think if you combine these three things together, what it translates into corporate earnings is that this year will be a softer earnings growth environment, FY25. And the first half, we saw about 3 to 4% earnings growth on headline basis on the top 500 companies. Third quarter was better than the first half in terms of reported number being 8.5, 9%. And our sense is fourth quarter will be better than the third quarter. And don't forget the next 2 quarters in FY26, the first and the second quarter, optically will look very good because the base is very low. So my sense is that economic activity has started to pick on the ground. The liquidity, which was very, very tight for almost 12 months, which we have been talking about, has started to ease. And when we speak to dealer, distributor, ground people, I think we have started to get the feedback that liquidity has started to improve. And that's something which will show full throttle probably a quarter or 2 quarters down the line. So from a fundamental perspective, things have started to get better than what it was for the last 6, 12 months. And I think markets will take cognizance of that as you move ahead. So that's the first part on fundamentals. The second part is sentiment. I think if you speak to anybody on the ground today, 9 of the 10 people are extremely pessimist because whenever they come in the morning and see the screen, it's all red. So I think the stock prices are driving the narrative, and our sense is that it's a great time for managers to pick up right companies, right stocks, because earlier in the last 2 years, you didn't get the time to research. Now will be the time to go deep into the companies, pick up your winners. And please don't get me wrong that it will not be the same way the market saw in the last 3 years. I think it will be a range bound market. It will consolidate itself and it will be a stock pickers market in the next 12 to 18 months. So sentiments are bad, but I think that's a great time when you pick up your winners over the next 2, 3, 5 years. And the third is the flow. Everybody is asking FIs kab वापस आएंगे? When will be the ghar wapsi of FIs? and domestic flows have started to slow down, and that will have a bearing. My sense is that with the correction in the US markets, it's a great news for emerging markets, including India. And I think
Right.
sooner or later, FI's flow should resume, is my guess.
Right.
CY21 till now, FIs have withdrawn $6.5 billion. And the entire money of $2 trillion has flown to US markets over the last many years. With this correction in
Right.
US market, I think capital allocation and capital flows will rotate. So I'm not too negative on the FI flows resuming back sometime during the year.
If you like this video, then like, share and subscribe to ET Now.